So I recently just had a big aha moment in my life as far as options trading goes. And this aha moment came in the world of online sports betting, which I'm not a big sports bettor, but I came across this one little piece of a sports betting app that really intrigued me. And I was like, wow, this is something that's really cool because I can apply it to the same kind of options trading strategy that I do all the time. So in this video, I'm going to show you how I use my new online sports betting to the relevance of how I trade options. So, if you watched my videos before, I'm a huge seller of put options. I'm a big option seller. That's what I do. A majority of the videos that I make here are all about option selling. We're going to talk about that and how it relates to online sports betting. So if you're an online sports bettor, you may know this already, you may not. I'm going to talk about this little concept that I found that it really will give you an extremely high probability of winning on your sports bets. So, and that's the way that I trade options. So I'm going to just jump right in here and we're going to talk about this new concept. So let's go right now. All right, everyone, Lee Lowell here from smartoptionseller.com. I make these free videos for the trading community almost every week. We all want to help each other and become better traders. So we're just going to jump right in and talk about what the option trading strategy I normally do and then how it applies to online sports betting. So if you've watched my videos, or if you come across my website, you know that I'm a big put option seller. What is put option selling? Well, put option selling is a way to collect upfront income for an opportunity to buy a stock that you want at a price that you want. It's kind of like naming your own price for a stock that you want to buy. And it's called put option selling. And I sell out of the money put options. So what you see on the screen here in front of you is a chart of Apple, a daily chart of Apple. And we all know Apple, great company, sells billions of iPhones and billions of Mac computers and billions of iPads each year, and they just make a ton of money. And you can see this long-term chart. This is a monthly chart of Apple. It's making all-time new highs. I mean, you really can't keep a company like Apple down. Now, if you're a bull, or if you're bullish on a stock, and I always play the bullish side of the market, and selling put options is a bullish strategy. So for me, what most people do who are bullish on a stock and they want to play their hand at options, they typically buy call options. And when you buy a call option, or if you're bullish on a stock, you're always thinking, where is the stock going to move to? How high is the stock going to go? Where's it going to get to? The way that I play in the options market, instead of me trying to figure out, even though I'm bullish, instead of me trying to figure out where the stock is going to go to, I take the concept of where the stock isn't going to move to. And in the way that I play it, it's really about figuring out where the stock isn't going to fall to. Most people think about, where is the stock going to move up? I'm always thinking defensively, where is the stock not going to fall to? Okay. And you can still play a bullish options trading strategy with that concept of where is the stock not going to fall. So this is Apple closed about $228 a share on Friday, September 20th, 2024. I'm bullish. I'm thinking, okay, I know I want the stock to go up, but instead of figuring out, is it going to go up to, $280, $300, I'm all about figuring where is it not going to fall down to. Okay. So what I do is I look back at a chart and I say, okay, $165 seems to be a pretty good support area where Apple has not fallen below since last May of 2023. So the way I can construct my options trade is by making an option trade where I'll win as long as Apple doesn't fall below $165. That's my line in the sand, $165. And the way I play it is by selling what's called an out of the money put option. If Apple's at $228, I'm banking on it not falling all the way down to $165. And I can make an options trade based on that. Well, how do you do that? So let's pull up our option chain here. And this is the option chain from Interactive Brokers. It's a broker I use. If you don't have a broker yet, or you're looking for a new broker, down in the description below, I have a link for Interactive Brokers. So we're looking at Apple options here. Okay, this is an option chain. Got put options on the right, call options on the left here. We're only focusing on the put options. So my goal is to make a trade based on that Apple is not going to fall from $228 to $165, and I can make a trade based on that. So what I do is I pick out an out of the money strike. Here's the strike prices listed in the middle. The 165 strike put options went out 25-cent bid at 29 offer on Friday, September 20th, 2024. So if I sell this put option, I'm not buying the put option, I'm actually selling it as my opening transaction. I'm going to sell it right in the middle at 27 cents per contract. What does that do for me? When you sell an option, whether you sell a call option or a put option, you are getting money. Someone is paying you money. You are not paying anybody any money. You're getting money. So just to make this trade, I'm going to get $27. The prices here, you have to multiply by the 100 share multiplier. There's 100 shares in every option contract. So 27 cents times 100 is $27. So if I sell one contract of this 165 put option for November, they all have an expiration date. So these are November 15, 2024. It expires in 55 days. As long as Apple doesn't fall from 228 down to 165 in the next 55 days, I'm going to make my $27. Okay. Now, that is what's called selling an out of the money put option. And why would I want to sell that? The reason why I sell out of the money put options is because it has such a high probability of winning. It has such a high probability of that outcome not occurring. I want to know what is the outcome, or what are the chances of Apple going from 228 all the way down to 165 in the next 55 days. And it has such a high probability of that not happening. So that means there's such a high probability that I'm going to make the $27 pretty much free and clear. Now, another way we can figure that out is we can go to our website. This is our website, smartoptionseller.com. There's a probability calculator that we've created here. Probability calculator will help you figure out what are the chances of an event happening. And in the case of the stock market, the event that I want to figure out is what is the probability of Apple dropping from 228 to 165 in the next 55 days. So what we're going to do is we fill out here 228 is the current price of Apple. We're going to go down to the expiration date of November 15th, 55 days. And our volatility is roughly 25% for Apple. And our target is 165. We're going to put those in both boxes. This is what we do. And when we click on go, it's going to give us the probability of Apple falling that far. We only need to concentrate on two boxes, here and here. So this one says finishing below lowest target. So this one tells us what are the chances of the probability of Apple finishing below $165 in the next 55 days. And that is less than 1% chance. Conversely, what are the chances of Apple staying above 165? And that's 99.95%. So right there, what this calculator is telling me is that I have a 99.95% chance of winning on this trade, meaning there's a 99.95% chance that Apple will not fall below 165. And as long as Apple doesn't fall that far, I'm going to win 99.95% of the time. And I'm going to keep my $27. Okay? So getting back to the option chain here. Now, you can also look at your probability of winning by looking at the delta column. Okay? The delta will tell you, what are the chances of, also an easy way to tell you what are the chances of the stock falling that far. So it's about a 1.7% chance. Now, what you want to do, and just remember, I'm getting about $27 for that to make that trade. Now, if you want to get a little bit more money, you're going to have to decrease the probability of you succeeding on that trade. A lot of people will focus on what's called the at the money options. Okay, the at the money options are the strike price that is currently roughly the same price as the stock is. So if Apple, and this was the after hours on Friday, so $227.76, so still roughly about $220, we can look at the at the money strikes, which are either the 225 or the 230s. So here, let's just say you sold a 225 put option. You're going to get roughly $6 and let's say round up to $6.80. That's $680. If you sell one of these contracts, someone will pay you $680 for your effort. Now, the 225 strike, that's only a couple dollars below. So what if Apple now could have a really good chance of falling from 228 down to 225? That's a much higher probability because Apple could move, roughly $3 in the next 55 days. So there's a higher probability that Apple can fall that far. Yes, you're getting compensated a lot more. You're getting, $680 versus the $27 that I got. But I had a much higher probability of knowing that Apple's not going to fall that far. If Apple falls below $225, what happens in this case is that you're going to have to buy 100 shares at $225. That's what happens when you sell a put option. You're basically contracting yourself out to potentially buy the shares at the strike price. So if Apple falls to, $210 in the next 55 days, you're on the hook to buy it for $225, even though you got $680 up front. So there's a trade-off. Do you want a higher probability of winning? If so, then you're going to get less money paid to you. If you want more money, you're going to have to accept a higher probability that you may have to buy shares of the stock, or because the stock can fall that far. So this is why I sell what's called the out of the money options. I choose these strike prices that are well below the current price of the stock, have a very high probability of winning. I can churn these trades out, throughout the year, having high probabilities to win. So bottom line is that's the way I trade options. But so now let's move on to the online sports betting thing, where I recently figured out a way to take this concept of selling deep out of the money puts and applying it to sports betting. So let's go to we're going to use DraftKings as our our model online sports betting app. You can use MGM Sports, whatever it's called, FanDuel, all the others. Now, I'm not a huge online sports bettor, so this is all relatively new to me. I'm just sort of getting started here. But for those of you that are familiar with online sports betting, this is what the DraftKings app looks like. It's on the desktop here. So I've got the NFL pulled up here. Here's a lot of the the sports that you can choose. NFL, to me, I love American football. So, and then when you look at the games here, here's all the games for the upcoming NFL on Sunday, September 22nd, tomorrow. And here's all the games, and here's the spreads. Now, if you know anything about sports betting, you know that the bookies, the odds makers, will favor one team over the other. Now, let's just take this New York Giants versus Cleveland Browns game here. What the spread is telling you is that the Cleveland Browns are favored by 6.5 points, meaning that the odds makers have figured that the Browns should win the game, but they're going to win the game by 6.5 points. Okay, so if you want to bet on the Browns by using the spread that's already given, you have to take what the odds makers are giving you. In this case, you can take the Browns giving 6.5 points, or you can take the Giants getting 6.5 points. All right, so if you choose the Browns, that means they have to win by at least a touchdown. If you choose the Giants could lose the game. As long as they lose by less than a touchdown, you will win the bet if you pick the Giants. Okay, that's typically how sports betting goes. And the way that I always knew sports betting is that you have to just, make your trade based on what the odds makers are giving you. Okay, so let's just say we took the Browns in this game, and we click on the Browns here, and you're going to bet. Let's just say your bet is $100. Okay, so if the Browns cover the spread, meaning if they win by more than 6.5 points, that's typically a touchdown. If you bet $100, you'll get $190.90 back, meaning you'll win $90.90. For your $100 bet, you could win $90.90. Now, what I figured out here is that, or if you choose the Giants, and that's another bet here, if you also put in $100 for the Giants getting 6.5 points, it's the same. If you choose the Giants, $100 you'll win $90.90. All right. So what I saw here, what I figured out is you can choose this thing right here, alternate spread right here. Now, if you're not comfortable with the 6.5 points for either the Giants or the Browns, you can choose a different spread. Okay, you can actually change the spreads, but that's also going to change the payouts, but it also changes the probability of you potentially winning. So if I'm a Browns fan, but I'm not comfortable with the 6.5 points, I could actually go down and choose a 1-point spread for the Browns. Okay. So instead of the Browns being favored by 6.5 points, now the Browns are only favored by 1 point, meaning as long as the Browns win by more than 1 point, I will win. So I'm going to click on this here, and it's going to create a new line here. So you can see the Browns are favored by 6.5, but now the Browns are only favored by 1. If I choose the same $100 bet, now my payout, if I win the bet, will give me back $137.03, meaning I'll win $37. Okay. So for my $100 bet, I have the opportunity to win $37 versus up here, I had the opportunity to win $90. But I've just changed the odds of me winning. Instead of the even, this is basically what the bookies are giving us. So that, I guess that's an even probability of winning. But now that I've lowered the spread, now I have a much higher probability of winning the bet, but my payout's going to be lower. But that's okay with me because I'd rather win more trades. I'd rather make that trade-off of winning more trades for a lower payout because the probabilities are much higher to win. Just like with the option trades that I make, I choose those deeper out of the money strikes because there's less of a chance for the stock to fall that far. In this case, by changing the spread in the game, there's more of an opportunity for the Browns to cover the spread and win. At the same time, it gives me less of a payout, but for me, that's okay. So I just find this very interesting that these sports betting now this thing may have been around for a long time and I just didn't know about it because I'm kind of new to the sports betting world, or at least online sports betting. So I find this very interesting that you can actually change your probabilities of winning your sports bets, and you'll have to just deal with the lower payouts. Now, if you think the Browns are really, really that good and you think that 6.5 points is easy to cover, so then maybe you go up to 9.5 points. Okay. So if you think the Browns could win by at least 10 points, you choose them, and let's see, you're definitely going to get more than $100 back. So if I bet $100, so now I'm betting 100 to potentially win $140. So I'm giving, the bookies have made the spread 6.5 points. I'm saying that's too small. I think the Browns are going to win by even more than that. So if you're more confident, then this is more like going to an at the money strike or an even in the money strike, where you're going to get a much higher payout, where I showed you that at the money put option on Apple was going to pay you a lot more money, but your odds of winning is going to decrease. So it works the same way with the sports betting. I just find that pretty interesting. So I just wanted to make this quick video and show you that. So for some of you online sports bettors that have not heard about the alternate spread, maybe think about changing the spreads and giving yourself a higher probability win with the trade-off of collecting less money if you do win. So that's that. I hope that's been interesting. Let's quickly go back to our website here. So if you don't know anything about, if you don't know anything about selling put options, which I just talked about at the beginning of the video, go to our website, smartoptionseller.com, and there's a couple things I want to show you here. You can get our free ebook, which is the ultimate guide to selling put options. This is an ebook that I wrote about what selling put options is all about, why we love it so much, why I've been doing it for over 30 years now as my go-to options trading strategy. Scroll down here, put your name and email address in here, and we'll send you a link in another email to download the copy. Two other things I want to show you. We also have our Put Selling Intensive webinar. Okay, this is an upcoming webinar that we have. Click on the link here. You can learn about our upcoming webinar about taking a deep dive into what put selling is. And lastly, we also have our video series that if you can't make the webinar, you can always purchase our 5-part video series about selling put options. You can go at your own pace. You can scroll down, read all about it. All right, so that's the few things I want to show you. Also here, a couple other things that we have 2 newsletters that we run. We have our one-on-one coaching and also the probability calculator that I just showed you. All right, so that's what we have at the smartoptionseller.com. If you found this video interesting or helpful, give me a thumbs up, give me a like. I try to put out these free videos for the trading community. Like I said, we all want to help each other get better. down in the description below this video. Please look at some of the other links. I'll put another video up on the screen here about put selling, so you can watch that. But down in the description below, I've got links for other books and websites and option scanners that can help you. If you know certain things that you're looking for within the market to help you with your option trades, take a look at some of the scanners that I have down below. All right, that's it for me. I hope you found this helpful. Give me a thumbs up, give me a like, leave me a comment, send me an email. I will always answer your emails. All right, that's it for me, and I will see everyone in the next video. This is Lee Lowell signing off.